Market structure is likely one of the most important concepts for you to know as a trader. If you are not able to identify market structure, you are not able to identify where the market is going. And a lot of people make big mistakes when it comes to market structure because they are constantly trying to catch the high or the low of the market, not understanding that following the trend, following market structure is the best way to become profitable. And this is likely one of the videos that I've gotten the most requests from. I've done the daily bias video for you to understand where the market is going, but market structure is the next most requested video in the channel. So let's talk about market structure. This is going to be the best video in terms of market structure that you will find on YouTube. So make sure to pay attention to this video because this can literally change your trading forever. So let's go onto the charts, let's go over market structure, and let's change your trading forever. So one of the most important things for us to understand as traders is how the market actually moves. And if you really ask yourself that, you understand that what is an uptrend? If I tell you in your mind to now draw me an uptrend, you're going to draw something like this. And this is basically already drawing market structure in of itself because you are constantly drawing higher highs and higher lows. And basically, every time that you see the low being formed, this is very likely going to be in a higher time frame PD array. And then what happens right here? So when we are forming this higher low, what you are going to see, let's imagine that this is the daily time frame right here. So right here, we have the 1 day time frame. So this is the daily time frame, and what you are going to see is that on the lower time frame, so right now, let's imagine that we are zooming in here and we are going into, let's say, the 1 hour time frame. So now let's say that this is the 1 hour time frame. What you will see is that during this down move, you are going to have bearish market structure on the 1 hour, while on the daily, as you can see, we are still bullish. Then let's say that we hit a higher time frame PD array. Let's say that this is a fair value gap. So we hit a daily fair value gap, which let's say it's down here. And then what you are going to see is that we are going to have this market structure shift that then will result in this move to the upside. So what you will see on the daily as a move to the upside, this confirmation to the upside, on the 1 hour, it actually is a market shift that happens on a lower time frame than the daily. So one of the things that is important to understand is that you always have external structure and internal structure. That means that external structure, if I ask you on the daily, if this is bullish market structure, you will always answer me yes. But one of the things is that on this move lower, again, we are basically going to do the same drawing. Right here on this move lower, the internal structure is actually going to be bearish. So we have a little bit of this move up right here, and then we start forming the bearish structure, followed by the reversal and back to bullish structure. So price is always going to be fractal. And what I mean by that is that even though the market might be overall bullish, there's always going to be internal structure that is going to be shifting. Let's say that this is the daily, this can be the 1 hour. Or let's even say that this is the 1 hour, this can be the 5 minute. And so what this means is that we are always looking for internal and external structure. And the highest probability trades are going to happen once external structure and internal structure align, meaning that instead of trying to catch these pullbacks during an uptrend, you actually just wait for the lower time frame to switch bullish, and then you start executing. Inside of the Simple Trading Edge, we call this order flow. And let's quickly break down that on the charts. So if we see euro dollar over the past 6 months, we can see that we had very nice bullish structure. And while so many people were trying to call this high, we were just waiting during this pullback for the market to switch bullish again, and then we just execute on longs because overall the market is bullish. And until when is the market bullish? The market is bullish until we sweep this high and we actually break this low. Because now we had higher low, higher low, higher low, higher low, and then higher low, and then we had the sweep of the high and then a lower low, right? And the lower low was due to the close of the market. So this daily close marks the big market structure shift. And now you might say, but well, Kimmel, does that mean that I can only execute on longs as the market is moving higher? And the answer is no. But the answer is very much more detailed than a simple no. And that is, let's say, until we have this market structure. If we go into the 4-hour, you can see that we had this bullish structure, and then we had this actual market structure shift, and then you could have executed on these shorts, right? But that is based on the 4-hour. And the reason I say this is because the daily is the most important time frame. If you are not trading in line with the daily, you are very likely going to be unprofitable. But when you start understanding that the market will eventually move bullish, but that on the 4-hour or on the 1-hour, you can take advantage of certain pullbacks, mostly on the 4-hour, you can understand how to take more advantage of the market. And so, what can you see? Well, once we had this move to the upside, as soon as we have this market shift, you can actually turn bearish. And that's where we had this trade right here that was a short, this fair value gap that constantly got respected, this fair value gap that was respected and moved to the downside. And then let's say that you take this fair value gap, you take a loss, but as soon as the market moves bullish, you're like, okay, that's it. We're now going bullish again. The daily is bullish. The 4-hour is now bullish. So now I only think about executing on the longs. And that's why, for example, here you have the move to the upside. Notice how the market moves bearish, but then as soon as it turns bullish, notice this. This is a beautiful entry that one could have taken inside of the simple trading edge. That is a sweep of this 4-hour low. Notice how the market is internally bearish here, but then you have move higher, move lower, move higher, and now these order blocks are being respected. Boom. We actually break out, we close above, so now this whole down close candle is an order block. So you either take a trade on the order block right there, or like this, or you wait for the confirmation right here once the market closes bullish, and then we have created a new order block and you can have a better entry. And then you can see that the market tapped it and moved insanely quickly to the upside. And that is why you probably already know this because we have talked about it in this video, which is the market moved lower. So now, yes, we are a little bit bearish. What do you wait for? You wait for the 4-hour to turn bullish. The daily is also bullish. So now, it's like rocket fuel. It's like a rocket. As soon as the daily and the 4-hour align and you understand how these dance between each other, you will see your trading basically be put on steroids. Because once the 4-hour confirmed that it's in line with the daily, notice how quickly we went to the target, right? But what is the problem? Let's look at the most recent months. Well, lately, everyone is like, Kimmel, how can I take advantage? Where's the problem with all of this? The problem is that so many traders, they are always trying to call the high. So they look at this high and they're like, yep, this is the high, let's go. Or right here, this is the high, let's go. This is the high, let's go. This is the high, let's go. And they always get taken out because they don't understand basic market structure. And that is that as long as the market is overall bullish and the daily does not move bearish, the market is always going to be impulsive to the upside, not to the downside. Until when? Until we see this actual good sweep and market structure shift. But notice how this was a 170 pip move that you would not have taken advantage of if you are constantly waiting for the daily to switch. But everyone thinks, oh my god, no, Kimmel, I need to find this high. I need to find where the high is going to be. And then they just get chop, 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 chop. Then they don't have any more money or any more drawdown on the prop firm, which, by the way, if you guys want to check Funded Next out, it's going to be the first link in the description of the prop firms that I am funded with. Code Kimmel gets you 120% refund. But everyone wants to take advantage of the high. They get chopped up, they lose everything. And then once the market starts to break lower, they think, well, it's done. I can't take any more advantage of the shorts. Not understanding, market structure has just switched, which means the move is about to start. And look at this. Look at the beauty of this move. So many people think that they just missed a big move when in reality the move has just started. Look, this was still an 800 pip move. There is a quote in the Reminiscence of a Stock Operator. It's one of my favorite quotes, which is the first eighth and the last eighth are the most costly to traders. What that means is that everyone tries to call the high, not understanding they can just wait and then let the market move and they ride with the trend. But everyone is trying to call the high, which means the first eighth, not understanding that the easiest money is in the bulk of the bearish move, right? So with that being said, you need to understand that right here, there is something that I call the first indication of a reversal, and that usually happens on the 4 hour. Notice where the market structure actually failed on the 1 hour. So we moved higher, moved lower, moved higher, came to the extreme. So higher low, higher low, higher low, and then we had this big market shift right here. And this is going to be a little bit aggressive, but as soon as this shifts right here, you are now heavily bearish. Until when? Until you are proven wrong. Let's say you are proven wrong, that's fine. The daily takes precedent. But if you check, you would have been a couple of days early from the reversal, understanding that this is not the highest probability because the daily is not bearish, because the highest probability trades are going to happen when the daily and the 4 hour align. But let's think about this. Let me tell you, think about market structure, think about the bullish and the bearish side. And I'm going to draw exactly what you're thinking. And this is it. Bullish market structure, right? Followed by bearish market structure. This is exactly what you're thinking. But one of the things that is important, it's always been in front of you. Market structure has always been in front of you. All of this is going to include a reversal, be it on the 1 hour, be it on the 4 hour, right? This is how the market is always going to look. So you always wait for this reversal, and that's where you execute. And that's when the rocket is going to go. But then there's going to come a time where the market does this, boom, it shifts, and instead of entering in the first one, just wait for the market to shift again on the 4 hour, and then you start being bearish. And if this is actually the reversal, and by the way, this should be paired with higher time frame levels, once the market actually reverses, this is when you start being bearish. And then when the daily reverses, then this is when you turn heavily bearish. But notice how long it took for the daily to reverse. Right? This is not the video that is going to make you a wizard that now is going to be able to call the high or the low. You do not need that power in order to become a profitable trader. You need to understand, if you just wait for the right moment to execute, which is going to happen when we have these market structure shifts. Look, boom, higher, low, high, boom. We move bearish. That's when you're bearish, right? Especially when this high low gets breached with a candle. That's when you become extremely bearish, and that's when you start rubbing your hands. Hell yeah, the move is about to start. That's when your daily bias turns bearish. That's when you start looking for reason to take the shorts. And now, if you are able to understand through this video, which is what I wanted to convey, that you don't need to be able to call the high or the low, and you pair this with the daily bias video, which is going to be popping up right here, you will have an extremely powerful way of predicting where the market is going to go. So that is basically it. I hope you enjoyed. If you want to test this out on a prop firm, then make sure to check the links in the description. For the next, you get a 120% refund. The link is going to be in the description, and I'll see you in the next one.